All right. Welcome to episode 48 of the More Doors podcast. I am excited for this one.
We have a doctor on.
We have our first doctor.
Yes.
Which I'm very, very excited about. Really awesome guest today. We're excited to be back after a little bit of a vacation. We are going to get started, or at least I am. We're going to get started right now. All right. Welcome back to episode 48 of the More Doors podcast. Today, we are joined by Ryan and Dr. Francesca Byrne. But first, we have got to do our job to support the people that support us.
That's right. This show, first off, you're listening to this. You're listening to the More Doors podcast, just to let you know where you are. But this show is sponsored by Deep Blue Capital. Look, you want to grow your money. You got money sitting on the sidelines. You're making that 5% in the high yield savings. But I've been reading some bad things about banks. Banks are in trouble.
Yeah.
And look, you need to go invest that. Just go check out what Deep Blue Capital's got going on. Go to deepbluere.com. Sign up for the investor newsletter. They got webinars coming out. They've got a book out that you can sign up and get sent to you. So Deep Blue Capital, just go to deepbluere.com and sign up for that investor newsletter. And if you're wanting to get a show just like this, you're wanting to get more exposure, you need to talk with Jesse Showalter here at Tour Studios. Makes us look good. If we can look good, he can make you look great. Just go to tourstudios.com and tell him that the guys from the More Doors podcast sent you. And then the last request, the favor that we have is go over to our YouTube channel, just Deep Blue RE. Just look it up on YouTube, hit that subscribe button. And then if you're listening to this on any podcast listening device, whether it's Spotify or Apple Podcast, hit that subscribe button and leave a 5-star review. That's how we're able to get some amazing people on like the guests we have today, Ryan and Francesca.
Absolutely. So without further ado, the owners of Cashflow Capital Club, please welcome Ryan and Francesca Byrne. How are you guys?
We're doing awesome.
Very, very good. Honored to be the first doctor on your podcast. That's amazing. So
I'm gonna have to confirm that, but nobody's claimed to be a doctor so far, and usually I feel like we would know. So we're excited as well. Really excited to have you guys on. I know we've been trying to do this for a while, so we really appreciate you guys taking the time.
Pleasure.
absolutely.
Let's dive in. Like I said before, I don't like to tell people stories for them. So give us the scoop. Tell us a little bit about yourselves, your guys' background, where you've come from, and how you've built your company kind of to where it is today.
Well, the long and short of it, I come from a background of finance, banking. My wife is in medicine. We've both been longtime investors, always had our eyes on real estate. We broke away from your traditional investing, 401k stocks and bonds. And once we started peeling back the layers of real estate, we got further and further, discovered multifamily, the multifamily value add, what that was doing for us. And we never looked back. So, yeah, I mean, like most of your listeners, I'm sure we started in single family, long-term rentals. We ran into some obstacles along the way, particularly with how much money we could borrow and lend due to our incomes. And though we had money to invest, we had nowhere else to go in real estate traditionally. And that led us into the multifamily. And we kind of got our feet wet as limited partners, just investing in other people's deals with the capital that we had and taking advantage of the leverage on that deal in ways that we could no longer do with the single family residential. And then we spent about 4 years in that space, just trying to wrap our heads around how do we
4 years too many, probably.
Yeah. How do we go from the single family thing that we're doing to doing what these guys are doing? And it was a lot of time in the books, a lot of time behind the computer. And we didn't really appreciate sort of the network or the partnership thing that was happening in the multifamily space. I think we had like W-2 mindsets of do it all yourself with what you have available to you. And once we broke free from that, I mean, we were off to the races. We were running away. I mean, we're at 1,300 doors under management, and aligned with some excellent people. We're bringing more people into the fold every day, both on the investor side, both on the operating side. So is that the long and short of it? And then
yeah, and then just my background. So I'm a full-time pediatric cardiologist. So I spent a lot of time in my 20s in training, and now I'm working full-time in that. I'm a full-time mom. I'm a full-time real estate investor. So I like to tell people I have 3 jobs, 3 full-time jobs, which is true. But it's good because then I can relate to your busy professional that just wants to be smart about their money, be smart about their investments, and have meaningful investments that actually do something, because that's who I am. So that's been how I've been able to kind of create that bridge and meet a lot of like-minded professionals in that way.
Man, there's a lot there. And as you were taking us on that journey, first off, I appreciate you guys sharing that. And I'm gonna kind of, we've got a list of questions, but I'm actually going to diverge from that for a second, because you touched on a couple different things, actually 3 things that I wrote down here. And the first one is, most of our guests have started out in that single family journey and then have grown into that next multifamily step. What was it about the single family? You mentioned lending and everything else. How many properties did you guys get to in the single family, rental space? And then what were those additional challenges you were running into from a growth perspective?
We were at 3. As the market started appreciating, it became harder to finance and purchase, right? The purchase prices were slipping away from us in the areas that we wanted to be in. And when we went to go buy our 4th property, the lender basically said, it was like, I thought you guys were going to buy a home to live in, another home to, upsize. And then he kind of told us, like, you can do one or the other, but you can't do both. I mean, your debt to income ratio is maxed out, unless you have some, a third W-2 to report. That's, you can do one or the other, and that's where it's like, well, dang, that
Dr. Byrnes' job, full-time mom wasn't paying a W-2 salary, I guess.
Yeah, it wasn't. It should, but.
Yes, it should, for sure. So you ran into that ceiling and that wall, which a lot of us do, right? And you probably, again, it's hard to find the discounts unless you're doing it full time, of just actively searching for massively discounted single family properties. You're running into cash flow issues, which in today's environment, especially where interest rates are, it's tough. Single family rentals don't pencil out. I mean, I just bought one all cash. It's a 9% return, but it took it's taken $230,000 of my own money. That's
before you even do the rehab.
Well, now that's with rehab.
Okay, still.
Yeah, $230,000 all in. But again, how many people actually have that just to buy it, and then it's one? So
100%.
Yeah.
So you ran into that problem, and then you went down the limited partnership journey, where, walk us through. I want to hear the mindset of the LP side, because a lot of our listeners may be new. They may be considering getting into this, and their first venture might be a limited partner, just like you guys were, just like Brian and myself were. And then we went, full time into this. So can you walk me through the vetting process? Were you scared? How did you, who was the first person you invested with, and how you did that that really due diligence?
Yeah, we had a knowledge and an understanding. I mean, one of the beauties of real estate is it's something you can wrap your head around. You can understand it, the mechanics and the value add, and where the returns are coming from, and the cash flow, the forced appreciation, the basic human necessity that's always going to be there, right?
It's tangible.
Very, very tangible. So we got that piece of it, and not doing it ourselves, I mean, it's kind of overwhelming, right? How do you operate 100 units? Like, I couldn't even wrap my head around how that worked and what happened. And then how do you finance it? How do you get the loan on it? And so we were investing alongside a colleague that we had mastermind with, or I had mastermind with in real estate sales. And he was about a year ahead of me in his journey, and he was bringing deals that made sense. And I knew him, I liked him, I trust him. I knew where his head was at. I know what type of person he was. So I think that made it easier to take the plunge. But I mean, he could articulate the deal and the strategy in a way that we both could understand. And it wasn't a lot of moving pieces or speculation in the play. It was one of those pure value add plays, operational value add, where we're going to do 1, 2, and 3. The income is here. And then if the market goes up, great. If it doesn't, it's still a great deal. So there's sort of the beauty and the simplicity and kind of getting the returns that you imagine without all the risk. We considered multifamily a low risk profile asset for many reasons. It's not like one tenant, one mortgage in the single family space that kind of rocked our world too when COVID hit and, the moratoriums were coming in. And I mean, like, to have 3 mortgages out there and your own, that you're in a house that you're living in, it
a lot of stress. I'll put it that way.
Yeah. And so that was our first entry into that. And then those same individuals that we were investing with actually started doing more things. And they kind of like, if they could do it, we could do it, because we came from the same, same background. We were kind of on the same journey. And, he was going forward at a quicker pace, but he had the one thing that we were missing. And that was a resourceful attitude and a network that he tapped into, where we were basically trying to reinvent the wheel and do everything on our own. And he was leveraging other people's expertise and kind of leapfrogged. We could have been in what we were doing for a decade, just trying to solve for every problem that you could imagine before it even pops up without having the confidence and taking the leap ourselves.
Yeah, 100%. And I think that's the mode that a lot of would-be investors or operators really get stuck in, is trying to solve all the problems that haven't even come up yet, because you can think of infinite reasons not to take the plunge. You made a really good point. It's probably one of the simplest ways I've ever heard it put about the diversification of your debt is, the single family is 1 mortgage per tenant. And there's a direct correlation to how mitigated your risk is, and that is the ratio of how many tenants per mortgage do you have, right? The more opportunities you have for somebody to help you pay it, the more mitigated your risk is. And so take us through kind of that next step as operators, because you have a very unique journey in that sense, meaning, coming from being in finance, being in medicine, having gainful W-2 employment, where I'm sure you guys are making a healthy living. You guys could have been LPs forever and made great returns, and that could have been a great investment strategy, and you would have had all the benefits of the upside. But you guys wanted to build Cashflow Capital Club because it spoke to you for some reason. So what was the mindset around, we got to get out of the LP space and we really want to become operators? What did that look like?
Yeah, so it's kind of funny because it happened almost accidentally. I don't think we set out to do that, but as we were participating on the LP side, we kind of were just, as you do, talking to friends, family, saying, oh, look, we're doing this. Look how great it's doing or can do. And then the more we did that, people would say, well, how do we do something like that? Or can you connect us? And then we started thinking, well, maybe there is an opportunity for us to be able to share that with, started with friends and family who had this appetite for this, but didn't know how to get in, where, didn't have those connections. And then from there, it just, they know a friend who knows a cousin and then it just kind of blew up from there. But it really was not it wasn't a purpose in the beginning. It just,
Yeah.
it happened organically, which I guess is the best way for it to go. But
And it happened on our basically our first deal. Our first deal was for 2 assets right next to each other. It was a $10 million purchase price and a $4.5 million raise. And each of the partners had a commitment, who can we bring in? Who can we share this with? And you approach that with a little bit of nervousness. It's like, I don't know. I have a few people in mind. I love the deal. Like I'm sure someone else would love it as much as we do. And it was basically giving people an invitation of, look what we discovered. You want to take a look at it? I want to know your thoughts on it. Cause it's like, I'm extremely biased. I'm like all in on this. This is the greatest thing that we found in real estate since we've been in real estate. Do you want to join us in this after we go through the highlights of the deal? I was like, yes, absolutely. And that 4.5 million came in 72 hours. And that's when the ball went off. It was like, oh, okay. And why wouldn't it be like that? Because it's like everyone wants to be in real estate. But it's time, it's resources. Sometimes it's money. Like our investors were coming in between like 50 and 200,000. And it's hard to buy a single family home with 50,000 and maybe no backup reserves, or maybe your lending's tapped out or whatever. But we gave an opportunity for people to participate in something that was even more attractive than what they had access to on their own. And then once that happened, it's like, oh, we have kind of a moral obligation to keep this door open, to keep the invitation there and not keep this to ourselves. And that's when we launched Cashflow Capital Club.
Man, love that. Go ahead.
Yeah, no, that's great. And that actually walks me into, so when you founded and launched Cashflow Capital Club, walk us through what's the long-term vision of that, and the story that is getting investors to invest in opportunities that you guys are bringing to them.
The long-term vision of Cashflow Capital Club, that's a great question. I mean, we've been so busy putting one foot in front of the other.
Day by day. Yeah.
We're always in a position. It's like, we don't want to be in a position where we come across great opportunities and have to say no to them because we didn't do our part. And letting people know what we're doing. So that was step one. It's like, we're doing what we love. We're investing in things that were basically a closed door to us. The whole private equity in multifamily space was inaccessible. Like, who, unless someone like yourselves or us, how do you get into it? And then we got such a reward from being able to extend the invitation to people that kept us, going. It's like, well, who else could benefit? I mean, full-time physician surrounded by physicians who have capital, but don't have time. It's not really their field of expertise. Medicine is an all-in type of activity. And we're allowing people to invest with people they know and trust. And we just went with that. And every day we're reaching more and more people. But
and go ahead. Sorry, I was just going to say, yeah, it is amazing to me now being on this side of it, because just the other day I was talking with a doctor, another pediatrician, and he was really impressed and couldn't believe what all we've done and grown. And he goes, well, how do I get started in something like that? I don't have 500,000. I don't have $1 million in liquid funds to do something like that. And I think there's still a lot out there that don't know that you don't need that much. It oftentimes doesn't take much at all to get started, but unless you're exposed to that, you just don't know. And so that's kind of where what our main goal is to have like your average hard worker be able to participate in something like this and not it be a huge, larger type syndication where you don't really get any communication or know what's going on with the deal. Like we're very hands-on, communicate, walk people through as much detail as they want on exactly how we're managing the property and people like that.
Absolutely. And then to double tap on something you had shared a little while ago about raising the money for your first deal and doing it in 72 hours, which is amazing. So many people, or so many operators or would-be operators, the big thing that holds them back is they're still coming from almost a sales mindset in as far as raising capital. Like the healthiest thing I ever heard around raising capital was you're not asking for a favor, you're offering an opportunity. And
Yes, exactly.
if you truly believe in your deals and you have great deals, raising the capital shouldn't be some obligation that you're going through. You're sharing an opportunity with others that they otherwise wouldn't have. And I think at this particular moment in time, that's especially important because most of the people that would be real estate investors, your high income W-2 earners, they traditionally go the exact same route that you guys do in the beginning, and they start with single family rentals. They might have $50,000 or $100,000 to invest right now. If you're putting $50,000 into a single family investment right now, that means you're putting 20% down for a $250,000, maybe $300,000 home. You're getting crushed on that investment right now. Your interest rate's too high, rents are stagnant. You got one thing goes wrong and it wipes out your cash flow for years. We're offering people the opportunity to invest in much more risk mitigated projects with higher upside and not have to deal with being landlords nowadays. Having that mindset, it's almost like you're doing them a disservice by not reaching out.
Yeah, absolutely.
Yeah. We're well aware because we were in that space and we were very close to it. I mean, I was in Manhattan in investment banking, very close to private equity, had hedge fund clients. I never got the invitation to participate in what they were doing. And we can right that wrong in a way. And, for people that are new to us, we just kind of we walk them through the pros and cons of single family versus the multifamily. Single family is great, but we're just getting out of, I'm signing closing documents today on one of our single family projects. Great return. I did the back of the napkin. You could look at it as a 20% year over year return over a 6-year period, but no cash flow negative the entire way. Replacing the roof, replacing the bathroom,
cleaning out mold. Right.
It's in Phoenix. The AC went down, had to pay for a hotel room for a week while that got repaired. Great investment, but man, I mean, it's a very speculative play. You're just kind of clicking on Zillow, hoping that the comps tell you did a good job and you chose the right area. Whereas in the multifamily space, I mean, it's sort of multiple tenants. You're taking advantage of leverage without having it on your personal balance sheet. You're doing these value adds on day one. We're not waiting for the market to give us that return. It kind of just walk them through, how we got from single family mentally as like, why is this the best thing ever? This is kind of our approach because it's truly asymmetric returns that aren't complicated to understand. I think would be
and let's actually touch on that because let's use your single family. So if we were to educate a little bit on the show, the single family one that you have a 20% return, right? That's unfortunately that's thanks to COVID market. If the COVID market didn't happen, you were losing money, cash flow, and more than likely you wouldn't be sitting at a 20%, that increase. And so you were at the right time, the right place of acquiring that property. And the worst thing that happened to the entire world that then caused the run up, if that were to never happen, it would probably be, a turd of an investment. Like if we were to really look at this. And so to go back and to educate where people don't understand, multifamily is not about the market appreciation. That can help us a little bit, but you guys are now operating and running a business and creating a great place for your tenants to be, creating a great atmosphere. but then you're going in and improving the efficiencies and the scale of the operations. Can you walk us through a little bit of how you handle property management and how you guys are running the operational flow so that you're increasing those efficiencies?
Yeah, we started with a hybrid in-house property management where we brought in a property management consultant who had 15 years experience, had the experience that we didn't have. We've been leaning on expertise in the multifamily space day one. It's like, why am I trying to learn all this? I'll never be as good as someone who's been in it for 15 years. We started that way. We had enough units right out of the gate to have the scale to put people on site, which was a maintenance person, a leasing person, and then what you would call our regional property manager. And that's how we started. We're here in Dallas now. And we said, hey, what we built in South Carolina and Georgia, I want to do that here with someone who's already has it in place. And so that's, I mean,
experience is key.
Yeah, we've been in conversations with people over the last 3 years to see who would we want to partner with when we came across the opportunities. And, we had a meeting of the minds. It's like they were so in on operations with a little focus on sourcing and financing and in the other pieces. We found a little harmony there, but it looks like 100 units looks like 2 people on site and 1 person overseeing it. To really give you an idea of like, can I even give you an example of an operational value add that we're dealing with right now? We're looking at 76 units over here in Dallas, Fort Worth. And it checks all the boxes. So when you hear operational value add, a lot of people think value add is go in, dump a lot of money, make it prettier, and then people will pay more for it. But that's not always the case. Here, the 76 units is owned by someone who's in their 80s, lives out of state in California, doesn't owe any debt on the property, and doesn't have any investors, and it cash flows for him at $240,000 a month. But the value add play is it's not being managed really by anyone. He has a son in town who plays golf, but is there to like open the door for a maintenance guy or something like that. So their entire focus on this property was CapEx and maintenance focus, not on people and systems. So as a result, they have 30% vacancy on the 76 unit right in the heart of Fort Worth.
And the units are great. New roofs, like well-maintained, well-kept. It's got a pool. It's a great spot. It just
a blue pool. So,
that's great.
And we're like, okay. So the first question you would ask is like, why and how? What's wrong? What's wrong with it? What's wrong with the neighborhood? How's it 30% vacancy? Like there has to be something wrong. Yeah. And then you go on site on a Saturday, and there's no one in the leasing office.
Yeah.
Okay. That's a red flag. Then you call, there's no go here, apply here, nothing. Rings, no one answers. Okay. So in due diligence, I was like, we're not only going to walk the units, but we're going to peel back the layers of this onion on these operations. My team goes in unit by unit. They go in with the inspection. I go and I want to pick the brain of the person in that leasing office. Like, how long have you worked here? She said 4 weeks. What were you doing before this? I was like, oh, I'm a dog trainer. It's not like I was a dog trainer. I am a dog trainer. So this dog trainer, I was like, okay. And then I was like, how would a tenant know that you have availability here? It's like, oh, I just launched a Facebook page. And I was like, with ads or something? It's like, no, it's this Facebook page. I was like, okay.
So if they stumble on the Facebook page,
and then their only source to collect people was this Facebook page that got launched 2 weeks ago, and then balloons out front that if you so happen to be passing, like you would have no idea. And then in addition to that, let's say you found it. It's like, great, this is the place we've been looking for. You fill in a paper application, you put a $50 application fee and a $300 like upfront deposit, and then it goes to a place in California where they have this approval process, and it takes them 2 weeks to get back to a tenant application. That tenant's long gone. So with that operations and with that owner and with the lack of people and I guess care, it's like it's cash flowing. It doesn't need to be at occupancy, but like when you get to 30% vacancy, it's like you're putting yourself into a situation where things could get kind of weird. They're actually like losing people faster than they can find them at this pace.
And it's kind of an easy thing to remedy, if you just put the people in place,
especially if you have the people already. We have the people. We have the infrastructure. So our partners have their property management company, and there are 20 people on the front office, 5 people on the back office, and like the day one, it's systems and people. And it's the subcontracting relationships are there. We could probably fill this in 4 to 6 months, and that value add alone, just do the math on that. That's 26 units, $1,300 a month across 12 months. Every dollar that we add in profit is $20 in value.
Well, the rents are what, 10% below market anyway.
And yeah, there's the behind market rents on the other, of course. Like if you have enough trouble filling the units, you can't get market rents on the units that you do have, because then that would create more vacancy, more turns.
Where do I sign up to invest my money on that?
Yeah, seriously.
Cashflowcapitalclub.com.
And then you guys as experienced operators, what happens? What do you need when you have 30% vacancy? You need financing, and 30% vacancy usually means bridge debt or seller finance. Seller finance. We showed him what seller finance looked like, what it did for him on the tax side, and he's actually making more money on our interest only payments than he was operating it himself. So he gets to stay. He gets to take some down payment money, walk away, and then gets monthly payments more than what he was doing, running around, stressing himself out, trying to operate it himself haphazardly and with all that stress. So that it was it's a real win-win when we find these situations. And that's what we look for. It took us about 2.5 years to find an opportunity like that in Dallas. So
that's amazing. That's truly a home run type deal. And I want to segue here based on that. It sounds like this is obviously an off-market deal.
Yeah, correct.
Okay. So fantastic. And those are usually where you're going to find the best opportunities. And I was going to kind of refer back to this earlier, and I think this speaks to it. You guys are like Francesca said before, basically have 3 jobs. There's a lot going on all the time. And so what does the operational side of Cashflow Capital look like, or Cashflow Capital Club look like, when you're talking about deal sourcing, asset management, and then I think even on top of that, going back to networking and raising capital, what is your setup as business partners to keep one another accountable to your activities every day when you have so many other things going on? How do you operate the business and stay accountable to it?
And throw in their husband and wife and kids.
Yeah,
and
kill each other.
Yeah.
Husband and wife. How do we keep it? We keep each other accountable with like a shameful look or something like that. That's kind of how the
a lot of passive
husband
aggression.
and wife, like give the eye, or
you didn't do this today. No.
She wakes up at 6 a.m. working out, and I feel like, oh, okay, this is what it like. So, I think one of the things when you're learning this from a book, or even in these mastermind networks or these educational like boot camps, they don't really share how time and resource intensive and managing an operation like this is. And you brought up all these duties that it requires. And each one of those, I would call their own verticals of expertise and maybe full-time activity. Deal sourcing, that's enough in and of itself to keep one person occupied full-time year round to get us where we are today.
Sure.
Especially when you're starting out with, deal sourcing is all about broker relationships. They have a roster that they've leaned on for 10 years of buyers that they go to. So to break through and get their attention, I mean, that just requires underwriting and LOIs, letter of intents, over and over again. I mean, we had 300 deals underwritten by us and our partners before we were given an opportunity on one of these, and we were the backup offers. And that, I mean, that's hard for people to push forward. That took a year and 3 months of underwriting. That was because we're in markets that everyone wanted to be in. Same here with Dallas, why it took us 2 years to get this opportunity. And if people really appreciated and understood that piece of it, I think they would think about this whole thing a little bit differently, maybe not give up so quickly, or just know, like, it takes some legwork to do that. And that's one piece, like getting the deal. That's when your problems just begin, right?
But it's also, it takes a village, right? You got to have that team in place that each has their own, specialty, and knowing that, like, okay, I'm not good at this part, so I'm going to have, John make that phone call, or, and I think for a lot of professionals and physicians like to be kind of do-it-yourselfers and try to take on more than they can handle, because, we're smart. We've been to all this school. We know how to, do this. But I think knowing where your limitations are and knowing when to ask people for help and knowing what you can outsource and what you can't, is all part of it and essential for that time management.
I love that. And we have that here at Deep Blue as well, where we've, and it's a cadence that we all have to learn. Like, Brian's in charge of the systems, Matt Buchowski, who's on vacation right now, he's in charge of underwriting, and I'm in charge of investor relations. So, until you get that, I appreciate you sharing that. To go back to even the time management, though, from, on your personal side, I know husband and wife, and I get that. My wife, helps me run some of my other businesses, and I'm, sometimes when things don't get done, it's more me, giving that look, and then the there's, this is not marriage counseling. This is, it's all good. It gets handled.
That's a different podcast.
Yeah, different podcast for that. But how do you effectively manage, because, your personal lives with running these assets and your jobs? Because look, there are times when everything's going great, that's awesome. But when you're taking over an asset, or an asset may not be running the way that it should be, and you gotta roll your sleeves up and get dirty. How does that look like from your time management that way? Because we are seeing some deals that have hair on them, even while they're going through the operational, where, like, this gentleman's at 30%. We're seeing here in the Dallas-Fort Worth market some higher delinquencies and lower vacancies as well. So, this is definitely a time of put your work boots on. So again, how do you guys just manage that at a high level, if you don't mind me asking?
Yeah, no, a great question. I mean, we've always approached this as owners or owners of a business, where we delegate roles and responsibilities, oversee that. From the start, it's sort of like, it's never going to be me in that leasing office. And it's not me doing the hiring for the person that's in the leasing office either. It was going to a person that had that expertise, putting them, giving them the resources that they need to succeed, overseeing it, and making sure that it happened, so that we could see at a high level that things are where they should be. Are we moving forward according to plan? Are the turns happening? Are the vacancies getting lower? That type of thing. And we were in a situation where I think the person that we started with on the property management side, you want to call our our regional property management consultant who plugged us into the systems and did all the hirings. I mean, she was good for our first 500 to 800 units. And then we saw things slip. It was just, she had a lack of systems. So she was more front office expertise, but didn't have the back office knowledge and systems that you really need when you're at that tipping point, when you're going from 500 to 1,000 units. And we knew that we needed a replacement for her. So it wasn't like I'm going to get in there and show her what to do. It's either she's doing it or she's not doing it. And we needed someone with more expertise. The next person that we hired had experience managing 14,000 units.
Wow.
But she was a W-2, right? She came from a private equity company. And, we said, what is it going to take to get you to join our little thing over here? And it was basically incentivizations with a share, and she had a stake in the game. I mean, and she like that change right there was night and day. So it's like we were getting by with something, and then, and that relationship, like I said, was as a result of being well networked and resourceful, where we spend a lot of our times. The masterminds we started early on, they're all people that do business with us now. It's like we do business with each other. And we can share resources, best practices, and we're all growing in that way together. So that's what it looks like from our standpoint. It's a CEO or maybe an executive approach, but we want to put the right people in a position where they can flourish and get out of their way. And if it's not working, we need to, it's people and systems, right? It's like, we want to surround ourselves with great people and do good deals. We want to surround ourselves with great people on the investment side, operational side, every step of the way. And when that isn't the case, you have to make those changes, because that's the way we're set up and that's what we can do.
Yeah. And it sounds like you've had that mindset from the beginning. And I think that's one thing that investors, it can really stunt their growth, is feeling like we're too small to really have that sort of executive mindset. We're doing too many things ourselves. We're trying to either save a buck here or there, or we don't feel like we're quite where we need to be to put the right people in place. We're managing a lot of things on our own, and it really it puts a ceiling on your business. And until you have that mindset of you're probably not the best person to be doing most specific things in your business, you're the best manager of people or finder of talent or leader of people who are better at doing the specific areas of the business that you need them to be, that's when your business really can start to take off. And it sounds like you guys have had that mindset from the beginning, coming from your backgrounds.
Yeah, absolutely.
Yeah, and it was out of necessity. There just wasn't time for anything else. That was the only way that this would have moved forward.
Yeah, the I can do it myself for cheaper, man, is that hard to get away from, because that's always the case. Yeah. and instead of working in your area of expertise, you're saving some money, but doing something you're not good at, it's going to come out half as good. I mean, we've fallen for that
3
trap
times as long.
so many times, like building a dashboard. I think we're like one of our LPs was helping us build a dashboard. We're like working on this for 2 years. And then we just decided, like, guys, this is never going to happen. And if it does happen, it's not going to be any good. Like, we went out to the tech professionals, and it's like, how much it gets done when next month, and then we're done with it, and we could focus on the things that we're actually good at. But yeah, that is the saving the dollar type of thing. I mean, you could, from personal to professional, that's the sooner you can humble yourself and just say, like, you get what you pay for many, many times.
Yeah. And we have made some mistakes like that along the way, but definitely learned mistakes. We learned a
Look,
lot
it
from
makes
them.
us feel important until we realize we're not that important and we can just outsource it. And then it just makes our lives easier. It's leverage. That's why we got into this business
Yeah.
in the first place, to have eventually the time freedom instead of being a
Mhm.
slave to task and building out systems and structure and all that. And so to be really hyper aware of your time, and we truly appreciate you guys taking time out to share with us. One of the last questions I have, and by the way, I've taken so many ahas from this.
He's
I'm
writing
taking
notes like
notes
crazy.
left
You
and
can't
right
see
over
it.
here. Could you leave us with what advice would you give to new investors that are looking to enter into just the multifamily real estate, right? Because you guys were brand new at one time. We were brand new. There's a lot more education out here. What would be some key advice for these new people listening? They're like, I want to get into do what you guys are doing and having 1,300 doors and $200 million under management.
For me, it would be pick up the phone, call people, get close to someone who is doing this and is in a position of where you think you want to be.
Mhm.
Start asking people questions. You can offer help, but the network and from expertise, resources, and finding out what people need and telling people what you want to do will bring you. I mean, it'll bring you to places where you couldn't even imagine. That did more for us than anything. Both, I mean, I think of every aspect of what we're doing. So,
Mm-hmm. Yeah, I would just add, that it's good to do your background, to do your education, to review things, and this happened to us too. At a certain point, you get stuck in the analysis, paralysis stage, and eventually you just got to plunge in, and you'll make mistakes along the way. That's all part of it. But just talk to people, and then go, find something, go for it, and then keep putting one foot in front of the other.
And while you're figuring things out, I mean, there's a lot to be learned from operators and investing with operators. That's where we started. We were in that space, earning while we were learning, but without trying to just take a blind plunge into something. I mean, we were riding on the coattails of experienced operators for a while as investors.
Yeah, absolutely. And Nick and I talk about this all the time, right? There are very few problems in your world that can't be solved with enough phone calls. That's just the truth. So picking up the phone and making those, whether it's to find a mentor, get with the right crowd, build the right relationships, or to raise money for your first deal, you got to be active to be in the game. So I think that's really, really good advice.
Yeah.
Well,
yeah. No, I mean, and I was waiting because usually Brian goes, he's just as long-winded as I am. So I was surprised that you ended it on that, Brian.
Trying to be more cognizant. I could talk forever.
You left me hanging there. So, as we wrap this up, where you mentioned masterminds. Are you guys still running these masterminds? And where can people find and connect with you? Because again, who doesn't need more doctors in their lives, right? So just, I'm sorry, Ryan, but we got to get Dr. Byrnes on this. And so who doesn't need a better and more doctors in there helping you give that advice on how to give that prescription to make more money and to build wealth and probably not to pay taxes. So where can people find you? And what about your mastermind?
Yeah, so we offer those exclusive access, those invitations and opportunities to uncover in our network. So you can go to cashflowcapitalclub.com, request an invite. Just mention More Doors podcast, and we will be in touch and help you get going.
Yes.
And our masterminds happen organically from people who we're either invested with them, they invest with us, and they're small. It's not a subscription mastermind or anything to offer like that. But
yeah, we're an open book. Just we share what we have, and that sounds good. Cool. If not,
yeah, I love it. It sounds like we all run kind of very similar styles. So we truly appreciate that. And And guys, if you're listening to this, go check out Cashflow Capital Club and, go support them. And then while you're doing it, you leave us a review and one, it's a thankful for our guest, right? Our guests are taking time out to share their experience and their journey. This isn't selfishly, it is for us, but it's for you guys. So leave us a review. Go on to our YouTube channel. Just go to Deep Blue RE. You can search that on YouTube. Hit that subscribe button. You can see the video of this. If you're listening on any of the podcast channels, go hit the subscribe button, download the episode, and leave us a 5-star review. And say, look, we want more Dr. Byrnes. We're skipping out Ryan on that, but I apologize, man. But we want more Dr. Byrnes on that, and say how much you loved in the show. And then if you can support us, because look, one of my ahas from this for a moment, if I can, is that what Ryan had mentioned about changing. They had a great person up into 400 to 500 units, and then balls started to getting dropped, and then they quickly identified they needed to make that change. Yep. And it's it's not ironic that this is the second time I heard it this week. I was in another mastermind earlier on Tuesday that said, what got you here is not going to get you there. Yep. And that's the same thing they identified as what got them, to that success is not going to help them get to that next level of success, because balls are getting dropped, and they quickly identified that and brought in, like you said, there's more talent. You've upgraded the talent on it. And that's how business is run. So that's one of my major ahas on that. And I truly appreciate it, guys, for joining us. And then as you're listening to this, go to deepbluere.com, sign up for our investor newsletter here at Deep Blue Capital. You can see the projects that we're working on. Get on our investor newsletter. Brian takes time. He went to school to be a writer. Right? And it's not high writing.
Got to use it for something.
Yeah. So he has a degree in writing. And so he needs to feel loved. And, Brian's all about feeling loved. And so go sign up for his newsletter. Let him know what you think about it. And then sign up for the book that we just wrote. That's all on deepbluere.com. You can sign up for it. And then I would highly suggest getting a podcast and letting Jesse make you look great, make you sound great. These microphones are awesome. So if you're in the Dallas-Fort Worth area, you can come into the studio, or if you're not in the Dallas-Fort Worth, Texas area, then you can Zoom on in and he can do it remote. So just go to tourstudios.com and become the celebrity that you deserve to be. So tourstudios.com. So Brian, episode 48 in the books.
Episode 48 in the books. Ryan, Francesca, thank you guys so much for taking the time. We truly appreciate it. And we'd love to have you back here and learn more about your journey.
Yeah,
thanks for having us.
We'll be there in person next time.
Let's do it.
Let's do it. We'll get you guys set up with the mics and everything. You'll meet Jesse and see his amazing beard.
Or I didn't make it. Or we go to yours, because I really want to write on the wall. I'm really jealous of that, of writing on that wall.
We'll give you. We got the pen right here for you.
Love it. Love it. We'll put our signatures on there. Thank you guys again for joining us, and another episode in the books, episode 48.
All right. Appreciate it. Bye, everybody.